Good evening, everybody. Sorry I'm a little bit late. Normal gremlins. All right. The aspects of the candlestick signals pretty much giving us a little bit of lead-in or a little bit advanced analysis of what investor sentiment is doing, not having to depend on just market trend itself. For example, as we pointed out, I think in Friday's chat, that this big up day in the Dow was not a reversal signal. That was just a big up day. And again, the relevancy to that analysis is, if this was some sort of reversal signal, the Japanese rice traders with 400 years of observations would have told us what this meant and give it a signal. But the fact that they never even mention it or give it a signal kind of tells us that this is probably not a relevant reversal. Now, as you can see what happened after that big opening, or that big trading day, there was still not very decisive bullish sentiment in this market. Now, I can bet you dime to donuts, there's lots of people out there saying, oh, this was a bullish move today because the NASDAQ was up 66 points. However, when we look at it from a candlestick perspective, that's not a strong day. They actually traded back below where they opened. And so that's, to us, is indicating there's not a lot of bullish pressure here on this market. Same scenario here on the S&P. With them trading up, that could have been perceived as a good bullish signal, kind of a kicker type signal. Now remember, we say kicker type signal to kind of quantify it, that your true kicker signal opens here and goes this way. You can see how they waffled around pretty much waffled around and then came up. But again, notice here's the two elements that you want to kind of always include into your market analysis. First of all, obvious, which direction was the market going? Not very directional. Two, what was the nature of this market? And that's also a very important evaluation. Up day, down day, up day, down day, up day. So the nature of the market is this was pretty much waffling. So now they come out of that trading range, but you still have to kind of include the factor that this is also an up day, a down day. So the nature of the market has not really changed that much. I'm going to skip over to some of the other ones. Crude oil, as you can see, is still in a sideways trading range. Gold, yeah, more of an uptrend. I could better look at these. And silver not going anywhere. Did I do gold right then? Is gold going up? It is. Okay, so part of your analysis is not only recognizing the signals or the patterns. Now, that's not only. Your first criteria for analyzing what's going on in investor sentiment should be, what are the candlestick signals and patterns? Where are they occurring? But more importantly, which is what we're going to kind of delve into here for the next X number of weeks, is what is the nature of your investing? So let me backtrack here. I've written an article that's going to go into either Tasty Trade magazine or Traders magazine on not only the concept of recognizing what are good trade setups. And I'll reiterate this for some of the people that weren't in the chat room today, that it's not only a function of recognizing a trading strategy that works well, but then finding your own, what we're calling clarism, C-L-A-I-R-I-S-M. And the clarism is, sound cuts out frequently. Ken, you might want to go up and log off with that little round X in the top right-hand corner and log back in and see if you can get a better connection. But the term clarism is kind of a derivative of clairvoyancy, that you want to kind of figure out what your, and that's a good word there, Carrie, what your bailiwick, your forte, not so much forte, but what can you trade that seems to fit kind of into your, I can't come up with anything more than clarism, that little niche that you're good at, and that's what you should be trying to find, not what everybody tells you is a good trading strategy. Stephen, that is part of that analysis. Some people might want to be trading stocks, margining stocks. Some people might want to be trading stocks with very strong candlestick signals or a pattern that they recognize. Or they might want to be trading options in conjunction with a stock position. Buying calls or puts. Some people want to do spreads. So what we're trying to lean away from is, what is a good trading strategy toward what is a good trading strategy for you, so that you're trying to learn, not trying to learn something that might not fit into your round or square peg hole, trying to find something that you like doing. So anyways, we'll get, so why I'm here. I have written an article on that most investors are taught how to invest improperly or wrong. So fortunately, we've already had a few people that have taken some time and effort to read it, edit it, give me an evaluation of whether it's worthwhile. So if you want to edit the article before it goes into the magazines, just email me, steve@candlestickforum.com, say I want to, like an opportunity to edit. And I'm looking for what would make it more clear, what would be more poignant as far as the points made in it, or what would be a title that would even be more compelling. So anyways, let's get going here. Oh, that was only the first part of all this. Secondly, I'm looking for people that want to do some statistical research. It's not published yet, RA. If you Right now I'm still in the process of editing it and getting it a little bit more fine-tuned. So if you email me, steve@candlestickforum.com, and say I'd like to read it, edit it, I want everybody's very objective criticism on how to make it better. All right, so what we're looking for is also people that want to do some back testing. We know that the best friend signal works extremely well. I've never gone into the specifics of the best friend signal because I know it works very well. But now what we want to do is, oh, for crying out loud, I'll come across the other one. We want to figure out not only when is it time to buy a good strong signal, but what confirms that good strong signal. So we're going to start off with the best friend signal. Best friend signal, best friend signal. I got, oh. So there's your best friend signal on VRDN. What we want to try to now quantify is what makes this a good, better probability trade. Where does it open? What we don't want to see, or what we want to be aware of, is if that's a good signal, what does the probabilities tell us if it opens stronger and starts trading lower? Probably telling us we don't want to be in that position. So something like this, best friend on AEHR. If it opened positive today and started trading positive, the probability factor is extremely strong that it's still going to go higher. And there's a few more that I can't. But anyways, if anybody's interested in doing some back-testing research, we want to kind of quantify what are the probabilities, what are the statistics of a best friend signal that confirms. So we're going to try to put a little bit more oomph into identifying these signals and patterns. So here's some of the ones that are still working. Data. And that's because we're seeing a lot of Chinese stocks still showing good strength. Here's one. Whoops. So we can see what happened on this best friend signal. So also going to try to quantify on a best friend signal, what is the average positive trading before seeing a reversal? Is it 3, 5, 7, 10 days? So we're going to try to put this into a much more viewable identification of when signals and patterns are confirming. Anyway, now let's get back on topic here. PHVS. You can see what happened here. This is where you start watching to say, all right, we're in a nice uptrend, but look what happened today. After they gapped it up, they did this. So where is your stop? You don't want to see it trade lower tomorrow. That would tell you they did fail at this level. Bah. Where was the other one? GT. B. Whoops. No. We had another one. I'm going to find it later. All right, things like ENVX. Now, this is also an illustration of when you see that gap down, this might be a trading strategy. That's it. All right, thank you. that we might consider this a bounce likely to go to the T-line. So the reason I'm pointing this out is not every strategy that I say, oh, that's a good strategy or a bad strategy. There are strategies that we can utilize as far as which pattern setups are going to produce a profit. GBTG. Yes, so here, and I don't know why this is the 200-day moving average, was right here. Let me see. I got to clean off these charts. The 200-day moving average is right there. So that becomes very obvious of indecision, why you put your safety stop at the T-line, because logic says if it hit a major resistance level, and I don't know why the 200 is the 200 not showing up on all these charts? No, it's on here. I don't know. But EBT, no, what the heck? EBTG. So this is just simple logic. If we start seeing reversal signals failing right at a major resistance level, then get ready to take profits. Let's see, did we do BZ? BZ was another one of the China stocks working well. And ERTX, no, that's not the right one, son of a gun. All right, as far as short positions, there was a lot of stocks that popped up today, like Rivian. However, notice how decisive it ended up. Very indecisive. So what do you do on a position like this if you're short? It opens positive. We know the doji rule says they're probably going to take it up to the T-line, close out the position. If it opens lower, you know that your bearish trend is still working. Now, on the other side of that coin was Snow. When it gapped up and started trading positive, where did you kind of figure the first likely target was going to be? At least back up to the T-line. The market's trading positive. This gaps up, coming out of the oversold area after a doji, back up above the high of the previous day. That tells you, yeah, the probabilities are telling us let's close out those short positions. Now, on something like CrowdStrike, if you closed out this position, and then it closes here, now at least we have a game plan. If this opens lower, what do we got going on? First of all, we got the double doji set up. Two, it told us that it failed right smack dab at the T-line. That's telling us they open this lower, you can start shorting this one immediately with a high degree of probability. That was all kind of illustrated in the biggies. Notice that Tesla opened up strong today, but look where it finished up. Very indecisive. Apple opened up strong today, but finished here. So when you start adding the, I guess, bullish consensus on this chart, it's not a reversal signal followed by a very indecisive trading day. It's still kind of telling us you want to be not going aggressively after any bullish trades until we get signal confirmations. Amazon, same scenario. A lot of people ask, why do you have the 34 on your chart? Because the 34 does act as a kind of a natural support and resistance level. So I put that in as a second tier type of indicator. Whoops. And Netflix. This is the only one that's really shown a consistent move in this market. However, we're right now back up into the trading range where it topped out before in the overbought area. So if you're long Netflix, what's your trading game plan? Well, we know the doji rule, so you probably want to have a safety stop just below today's low, because if it trades back in that direction, that's telling us it failed up here. Excuse me. We did Apple, right? No, NVIDIA. Skip NVIDIA. So this remained decently strong. I think after hours it was trading back below the 50. So once again, you don't have a real decisive trading range here, but that gap up and the fact that they didn't really sell it off to the lower end of the trading range kind of tells us there was still buying going on going into the end of the day, or there's still at least some bullish direction. Okay, so our first quantitative project is the best friend signal, because we know it works extremely well. Probably the next one will be the kicker signal, because we know it works extremely well. So how extremely well is extremely? That's where we really want to zero in on what makes that a good bullish trade setup. Obviously, if it opened down here and started trading down, that's not bullish confirmation. If it opens here and starts trading, that is bullish confirmation. So we want to find the ones that are confirming the strong signals and knowing how they open afterwards. AGL did a kicker signal today. So there's two elements of knowing why this, let's say, two elements that you can apply to this kicker signal. One, it's a strong reversal for some reason, because it's a kicker signal. Two, what's our next step? Let's go see what the news was that created that strong signal. If it was somebody's upgrade, might not be that relevant. If they had good earnings, or they have a major contract or an approval or something, yeah, that now you can look at that and say, is that going to create more upside? Now the other kicker signals are what we call the trend kicker signal. Trend kicker signals really are also significant, because you're in a trend, they open here, close here, they gap it up and take it this way. That's an inference that there's going to be a lot more upside. So I'm going to backtrack here a little bit again and say you might not have the wherewithal, the patience, or the mental patience of trying to learn every single signal or pattern. But you might catch on to a few that become a very strong indicator that you can recognize. Say, well, maybe I'm just going to concentrate on kicker signals and trend kicker signals and what they illustrate. The reason for doing that is now you're kind of controlling your own analysis. You're not having to depend on somebody else's analysis or somebody else's recommendations. You're actually now controlling your own, kicker signal here. I told you there's a lot more force to the upside. And I think I had another one. Missed. So here's where you put your 2 plus 2 together. A trend kicker signal, implying more upside. Is there a pattern here? Well, you can see the classic pattern. There's your J-hook pattern setting up. So why has this become a much higher probability trade? One, you can see the pattern. Two, you can see it's being instigated by a trend kicker. We know what the results of a trend kicker signal is, more upside. And if there's more upside, that's going to be better confirmation that this pattern is working. Another very strong probability trade is the bobble breakout. First of all, we recognize the pattern, the J-hook pattern. The reason the bobble breakout is more compelling is because we may be watching to see the J-hook pattern, whereas everybody else is watching to see what happens at that resistance level. See, for a kicker, does the next day open need to be beyond the previous day's range or just the previous day's close? Just the previous day's close. Remember, the strength of a kicker signal is implying there's going to be more upside. So if you saw a kicker signal, and let's see, okay, go back to one that I'm ready to buy this on positive trading tomorrow. That's the assumption after a kicker signal. What we don't want to see is it opens down here. That tells me, oops, the bulls aren't there. But we already know this is a strong signal. If it opens down here, probably not going to chase it just yet. I shouldn't use that word. Not going to go after it just yet. But if it opens here and starts doing this, coming back up through this, the close of the previous day, what color is that candle? Obviously a bullish green candle. And why is that relevant? Because we already know there's a very strong bullish move. If it opens higher, where do you set your stop? Oh boy, probably all the way down here. Now, isn't that a significant move? Yes, but what are the probability factors at that point? You have a kicker signal implying we should be going in this direction. So to counteract that, it would have to be very strong selling, like all the way back down through this level, to say, oh, this trade didn't work. Let's close it out. But part of that analysis, again, is this has already shown us a lot of strength. The implication should be, based upon our candlestick knowledge, is it should be moving in this direction. Another bobble breakout. Now, why is the bobble breakout a good trade? Because everybody's watching to see what's happening here. We have a little bit more input or clue to the fact that it's doing a bobble breakout. And why does this help us as far as a trade? Because we're buying the pattern. Everybody else is coming in buying because it's broken out through this level. I am sorry, I understand how to spot a kicker signal, but I am not understanding how to recognize a trend kicker signal. Why does it matter? Does the trend kicker signal mean bigger profits on an option trade? Rob, no, it basically tells you there's going to be more upside. Because what is this little combination telling you? Now they were selling it off after a buy signal, and then they gapped it up again and went the opposite direction, doing kind of a trend kicker signal. The implication is, yep, they're still buying this, not only with good force, but with great force, because they gapped it up and took it up exactly what we would expect coming off a buy signal. All right, so that's the significance of a trend kicker signal. And we also have the other, I don't know if I've got one on here or not, but a flutter kicker signal. We'll do a session again on the kicker signals. And the reason is that we're going to start working from the top down, meaning we're going to start concentrating on what is the best signals, your best friend, your left-right combo, your kicker signal. And I can't think of all the other ones. But once you start recognizing what becomes strong signals, you don't have to go through the whole gamut. Now, is a bullish engulfing signal good? Yeah, definitely. But what is better is cost a kicker. That's a trend kicker signal, yes. Opens here, closes here, gaps up, and goes in that direction. That is a good bullish chart. I'm going to put that on here. Hey, you think after all these years I'd figure out how to read my own handwriting. Which apparently I did not do right. I can't tell what I wrote there. That's just ridiculous. Shouldn't do that when I'm drinking heavily. So there's your best friend breakout on STG. So now we're going to put that on a list for tomorrow. You want to watch to see how they open this. Again, if they open it here and trade it down, you don't go after it. If they open it here and start trading it positive, it's doing exactly what you would expect that best friend signal is telling you. DH, here's your morning star signal. Also a very strong indicator there's been a change of investor sentiment, which also produces things like a bullish scoop pattern. I'm sure I just did this right. There's that morning star scoop pattern followed kind of by a doji sandwich. So what's the implication here? Well, the doji sandwich says there's more upside. Your morning star signal says there's probably upside. Now you've got kind of a McMuffin scoop pattern. What's the implication? Probabilities are pretty strong. This is still in a good uptrend. And I've got a whole list of stocks that are acting well at kind of a support area. CAS or CAAS is telling you this is where they've decided to buy. The probabilities are pretty strong that we're going to head higher. Kind of the same scenario on ResMed, except does anybody know what happened to ResMed? It stopped trading yesterday and it didn't trade today. Is there any news? Yes, I know it's halted. Why is it halted? All right. So anything or any time you can see where the support level is, you start seeing buy signals, it just puts you in situations where the probabilities are that much greater in your favor. I could go, I've got a list of 50 of showing positive trading from support levels. Oh boy. Oh, rare, that's what I wrote. So on something like this, you can see the fry pan bottom breakout. What's the first thing that we can do? Is go back and see what the news was that created that move. That's that rare process, research analysis reverse engineering. They all hold it and don't say news. All right. Med announces the completion of its previous announced stock merger transaction. All right, so there's an. Okay, thank you for that information. Now we have to see how that affects the stock price. I don't know why I've got this one on here. I guess the fry. Oh, I've skipped the fry pan bottom. No wonder we're done so quickly. SRTS. Here's your fry pan bottom. There's your breakout. These are what you want to try to. I don't know. Did they change the symbol? No. Huh. There you go. So what do we want to see confirming a fry pan bottom? Strong buying. Notice what this strong buying was. A gap up through where the pattern started. That's a good strong implication. We're going to have more upside. Same thing with Tupperware. Fry pan bottom, breaking out right at this level. So what does that do for us as a visual? Notice we have a fry pan bottom. They're breaking through the 50. If this opens positive, what can we assume from that? One, we've got a doji sandwich. Two, it's trading positive because everything. Let's see what's happening in there at the 50-day moving average. So avocado was still in that same category, but this is why you want to understand what the signals tell you. What should we be seeing on this one at the breakout level? A breakout. When they close back here, if we were long, what's that tell us about our trade? Close it out. Now in this case, I think it was because, did Apple say they were going to not use their chips or something? But tell us that this did not break out. Let's go on to a better probability. Where would you be buying this one? If they ever circle it back up and come up through that level. Match, another one that was getting ready. It did come up through this level. Now we know what to do with this trade. There's agreements to raise up to 9. Okay, thank you. So there is some news out there. Yes. Oh, has Apple stopped using chips avocado by 2025? All right, but that can always change. So there's the fry pan bottom. At least now there's a game plan. If this starts trading up through the 50, you can start going after it because everybody else is watching to see what it's going to do at the 50. There's your breakout level in this area from that fry pan bottom. Now, notice also what happened in this stock today. The market started trading off, getting weaker. but a pattern will still kind of maintain its strength because it's not a reversal of one day. It's more of a buildup of investor sentiment. Kind of the same scenario. Where do we expect a breakout? Over here. Now we just want to watch that if this starts trading positive, more probabilities or better probabilities. I just read that the symbol will stay ResMed and it will resume trading tomorrow. All right, thank you, Kath. Did I do Tupperware? I did Tupperware. Did avocado. Tyson Foods. Oops, another one that might be in a little bit of trouble right there. So if you were long because of the fry pan bottom, what's the trade strategy for tomorrow? One, they better open it positive and trade positive. Two, if they open it lower, where do you think they're bringing it back to? They're bringing it back to the level that acted as resistance. Now they're pulling it back to see if it's going to act as support. So you might close out the trade, but get ready to buy it if it starts showing strength off of that level. Because that becomes a high probability trade setup because everybody's waiting to see if the FTSE is going to support. If it does, they get enthusiastic and start coming back into that trend again. EXTR, if this opens positive, what do you got going on? A fry pan bottom followed by a doji sandwich. You just mentioned the 50-day moving average. I only use the T-line, 250 and 200. Today, CNBC said that 100 moving average is key. Rob, I'm ignoring that since I can't have too many indicators. No, I don't put any value on the 100. Number one, because what is our top criteria? Our top criteria is the pattern and the signals. Everything else is either a confirming indicator, not either, it is a confirming indicator, and just to get off topic here a little bit, I've watched for years some of these analysts on CNBC, and I was just telling one of my good friends in the money management business today that it is surprising how lack of knowledge some of these money managers have, and they're considered experts and on TV programs. And some of them have the most stupidest trading strategy I've ever heard. Quick example. One guy said, oh, we're going to buy Apple when it comes back down to 150. And if it continues to go down further, we'll probably buy some more. And I'm thinking, why would you be buying a stock that's going down? You have no idea when it's going to turn around. Another guy said, oh, you haven't lost any money if you haven't sold any of your losing positions. And even the commentator that day was arguing with him, and I'm thinking, if I gave you $1 million to manage for me, and it's now worth $600,000, I think you've lost me some money, whether you've sold anything or not. Anyways, I could go on, and I usually do. Another fry pan bottom breakout. Right there. This is what we expect coming in at the bottom, is that exuberance coming in. CJ, that's pretty much true. Yes, so that's why I always kind of advocate that you want to know how to invest, because there's only one person that is really concerned about your account making money, and that's you. Everybody else is concerned about how not to lose your money so you can keep paying them year after year. Another fry pan bottom. Get ready to buy this positive breakout. And again, notice what happened today in this one. It still traded up strong, even in a market that was very lethargic. On the opposite side, anytime you see a market that's not doing well or showing any great resiliency, that means there's probably just as many good short positions as there are long positions. So as you can see, the best friend signal took this down and brought it back up. However, if they open this lower, that force of that signal probably tells you the bulls couldn't maintain control again. It's still heading lower. I think we did that on, oh, pshaw. Oh, I can remember a signal. That's great. Anytime you see that strong sell signal, like a bearish best friend, the probabilities are the force is still going to take you lower. FCN. This is what I put in the category observe the obvious. Look what happened as soon as they got to the 50. That's where everybody was starting to take profits. QDEL. Right at the 200, did a big bearish engulfing. Big bearish engulfing. Who do you think is winning this battle? The bulls or the bears? This one becomes a very strong short position. Cutter. Anytime you see that slow rollover, look what happened right smack dab at the 50. They opened it and immediately traded lower. That's a good bearish signal. And this is what you're kind of striving for. Not only just a downtrending position in the short position, but one that's ready to break down and sell off pretty hard. With the patterns and signals, which are the ones where we don't worry about stochastics? The kicker signal is one. The kicker signal is so strong it doesn't matter where it occurs in the stochastics. The best friend signal probably doesn't have any relevancy as to where you are in stochastics. That's not the right one. Let me see if I've got one on here. ARVN, another gap down. Harmony, there's your bearish best friend. Again, notice where you are. You're in the oversold area. But if you would consider this, whoops, kind of a big dumpling top. Remember what a fry pan bottom does? It breaks out when your stochastics are probably up in the overbought area. Where's the dumpling top break down? Probably when your stochastics are already in the oversold area. What's this setting up for? Your slow curve, getting ready for a bearish scoop type pattern. Another one that you could be buying on weakness, because if it opens weaker tomorrow, what's it tell you about this level? Not acting as wave 1, wave 2 anymore. You're now going into wave 3. They talk at 9 in the morning, all right. 9 in the morning before the market opens? All right. Did I already do this? I did. Came across it again. So this must have strong relevancy. There's your bearish best friend. Telling you there's probably a lot of strength to this. All right, so with your analysis of, or trying to accurately analyze price movements, which is why we use the signals and patterns to tell us where our probabilities are, we're going to be concentrating also on your clarism. Because if we give somebody that has a specific interest, a specific innate ability to recognize a trade setup, just like anybody else that has a talent in a specific area, when each of us have that, we just have to find it and recognize it. That's what we're going to be concentrating on. Would buy a call option if you saw a kicker signal at the open on a Friday, the last day of the week, expiring for a quick move that catches the opposing trader? Oh, Rob, I don't know. That's I don't care who's caught off guard. If I see something like this going into the close and it's not selling off, and I can see how far it's selling off by just flipping to the 10-minute chart. They aren't really selling it off. So that strength of that kicker signal says, maybe I buy a half a position of calls here, and then if it opens positive, buy the other half. So I can at least calculate my risk reward, that if this opens up here and trades higher, at least the calls that I bought are already producing a good profit. I think that's about all I got for tonight. Again, we're looking for two class participation aspects. One, people want to edit the article that's going to go into either Tasty Trade or Traders Magazine. I'd like to have some insights. And two, if you like back testing, we're going to be looking for criteria of anytime we see a best friend signal, what's the probabilities of it going positive? One. Two, what is the probability improvement if it opens positive versus negative the next day? And then three, what is the average length of a best friend signal price move? Now that's going to be a little bit more difficult to evaluate because maybe the market's in a downtrend and it might not be as strong, or the market goes into a severe downtrend as it's trading right here. Guess what I'm saying is, if you see a kicker signal, how many days out would you buy the call option if that kicker showed up on a Friday? That's up to each individual, Rob. That's not for me to tell somebody what they should do. What options should you be buying here if it trades positive? Well, some people are a little bit more aggressive. They may only go 5, 10 trading days out, 2 weeks. Somebody else might say, oh, I'm going to hold on to this longer term, or I'm going to be a little bit more safe. I'm going to buy options 3 weeks, 4 weeks out. So that's what I want to kind of get away from, is telling people what their strategy should be, because my strategy might be completely different than what your risk-reward strategy will be. Now, if you're not sure of what that strategy is yet, then maybe you buy some options that are 2 weeks out and buy another half 4 weeks out and see which ones make the most sense. So this part of trading is based on, at least you don't have to guess, or at least you have high probabilities of knowing which direction a price should be moving. And that was kind kind of what I was illustrating the other day is if you were like me way back when, you'd see all these promotions that we've found the new secret of how to make money in the stock market. So you'd sign up, and for the next 2, 3, 4, 5 weeks, you see nothing happens, and it didn't work, and you don't know why it didn't work because you didn't understand what their trading strategy was. So then you move on to the next promo and go through the same process. So that's different here. We know that candlestick analysis works. We know there's high probability situations. Again, we're even going to refine those probabilities as to how well they work. Now, you don't have to worry about whether the system is working or not. Now you want to see, all right, what makes a high probability trade even better, and what is the trading strategy that is comfortable for me or that I can see that works well for me, which might be completely different than somebody else that's doing the same trade setup. Okay. Any other general questions on candlestick analysis? Rob, we will be doing options. Again, I was telling Vincent, are you in here tonight? I was telling Vincent that now that the weather is crappy, we'll be doing a lot more Tuesday night and Wednesday night trainings. Again, for everybody to get a broad spectrum of strategies and what would be the best strategy for them. Okay, all right, yes. All right, any other questions? If not, Jim, go ahead and do the double line. And it looks like Georgia might beat TCU tonight. Whoops, did I miss? All right, in 3.8 seconds, do the next double line. So the topic of the article is, are most investors taught incorrectly how to invest? I'm going to try to swing that around, and also while I'm swinging it around, to learn how to invest, why prices move, not the conjecture that if you've got a company with real good earnings growth and good management and good prospects, you want to buy them and hold them long term. Well, obviously that didn't work in 2008, didn't work very well in 2022. So the main point of investing is finding things that are trading in a positive direction, or the direction that you want to go, and finding the elements, in this case the elements being the candlestick signals, that puts you in that direction, not projections of what somebody's earnings are going to be. Because you can have the greatest earnings projections of a company going to do fantastic, but if they're trading off the market, or if they're not buying that stock, it doesn't do you a hill of beans of good. TXG looks like it's at a fry pan bottom, breakout through this resistance level. Stay long, just watch to see what happens once you get to the 200. Bison, just whoops. Yeah, that sold off a little bit. So you gapped up, have a doji, a sell-off, open positive, a sell-off. What can you see from those graphics? Obviously the bulls aren't here anymore. If this opened lower tomorrow, I'd be more inclined to think it's coming back to test the T-line. I'd close it out, but where would I look to buy it again? If it came back up through that level. And Groupon, same scenario. Notice the doji, the hanging man, the selling. Where did they take the selling? Right smack dab to the T-line. Now that's not a really strong indicator. So if they open this lower tomorrow, which also probably would be a function of what the overall market was doing, I'd probably close it out, and again, wouldn't pay attention to it until it broke up through this level. Parts, stay long. Nice fry in or J hook pattern breaking up through the 200. If I was long, I'd just put a safety stop at today's open. ESPR. You could buy this one on positive trading. Don't let it close back below the 50. UMX. Uh-oh. UMX. Are you looking for mucks? Get ready to take some profits on a lower open. Devon. Another one. You got to be careful of this level right here. I say careful because after trading positive, after gapping up, they started selling it off. That's not good bullish indication. AMD. Bullish candle after a hammer signal gap up. Now you want to make sure that it continues to trade positive up through the 50. Micron running into a little bit of trouble. And AMAT, same scenario. So again, even though some of these stocks traded positive today, they were indecisive. So that, again, is a much more clear analysis based upon the graphics of candlesticks than just merely price movement. Another one that showed weakness after breaking out. That kind of gives you, let's see, what is it? Announced the acquisition of its additional interest in Hypercoal Meta. All right. Thank you, Jamala. Let's see, Hecla. If you stay long, I'd have a safety stop at today's low. If it comes back down through there, telling us this area is acting as a little bit of a resistance. Lulu, that one you can short. Wave 1, wave 2, Barry's best friend going into wave 3. XOP. No. Look what it did today. Opened positive and traded lower. That's not a strong chart at all. I probably wouldn't pay attention to this one until it comes back up through that level. Uber. The doji setup. The doji rule tells you whether if they open it lower, they failed at this level. If they open it higher, the moving averages are not going to act as resistance. Rig, stay long. There's your morning star signal. There's your breakout. So you stay long. Right now I just put a safety stop at today's open. This Con Ed. That's, Elaine, that's kind of a nothing chart. Now, obviously, you'd be buying this one more for the dividend yield, but it wouldn't be a trader. Again, it's one of your quintessential institutional traders, but there's nothing on that chart that would get me real excited about wanting to put money into it. It's probably going up, but probably at a very slow pace. RA. Now you have to watch to see what they do here at the 50. And PDO, you stay long. You have your safety stop at today's low. If it comes back down through there, they're coming back to test the T-line. Will, I'm on the, I'm going to write up how you do the Lasix diet. If you'll pardon the graphic description, you just take good milligrams of Lasix and then you pee like a racehorse all day long. I'm lighter now than I have been in probably 2, maybe 3 decades. And I was always on a diet. I was on low carb. I was on low calorie and discovered that it was salt that was maintaining all my weight. This is what? Bloom. Ralph, if you're going long, I would probably use trading above the moving averages as my criteria. RNA, that's a very good short. Ralph, that is a good short. Your evening star signal, there's your first target, probably the 200. INDO, if you're long, stay long. If you're going long, wait for it to get up through the 50. And GP, there's your rare situation. Check the news to see what produced that big price move. OLPX, that one you can stay long, kind of a fry pan bottom, and you're right there, right at the breakout levels. So right now there's no reason not to stay long on this or even go long. LIF, that's another one where you go to your rare process, find out what the where the strength is coming from. Lithium, those charts are starting to come back up a little bit. Lithium, LAC, could buy on strength, but you need strength. Piedmont, stay long, use the your safety stop at today's low. Things like Blink, get ready to buy on strength. Charge Point broke out nicely, so you're still waiting to see if they can get through the 34 of this downtrend. Right now, 38-7, Georgia. APT, all you can do is stay long, not a real dynamic chart. Just watch to see what happens once you get to the 200. Wayfair, that ran out of steam. If you were long and this opens lower tomorrow, close it out. They're coming back to test the 50. Mullen has held up reasonably well. It was Weller earlier, but you can see that the T-line is still a factor on this one. Can you say safety stop? Is that an executable stop order? Yes. Which one were we just looking at? Let's say Wayfair. Wayfair, so I don't have to make another decision, is maybe I say, all right, if it comes back down to this level, it's not going in this direction, it's going in this direction. Close it out. Now, the reason you say that or do that is, if you were like me in the past, I'd say, oh, maybe they'll turn around and take it back up. Oh, maybe they'll take it up. And I spend all day worrying about it. Whereas if I put a stop where I know it shouldn't be trading, that does three things for me. One, it doesn't keep me making or watching a bad trade all day long, hoping that it's going to come back up. Two, it puts money back in my account right away so I can go find a good trade someplace else. And three, darn, can't even think of three. I guess three was more, again, freeing up your mental aptitude, that instead of worrying about a trade that's not working and figuring out what to do with it, your mental decision-making process is clear, and you've closed out a bad trade and go on and find a good trade. AMD, JP, yeah, has to open positive to Nicola. That one might be coming up. You got a Morningstar signal with the best friend gap up, so at least figures coming back up, possibly to test the 50. I'm sorry, the 34. You are the worst investor in the world, but that's true. How? But yep. But the other side of that coin is, if you learn from your mistakes, I'm one of the smartest investors you'll run into now, because I've made every mistake you can think of, and I would perfect them to where I would make those mistakes over and over. Do you only look at what the candle patterns and signals show you, what the market is doing, or do you consider any of the SPY will drop another 10% when the talking heads on CNBC say the stock earnings will be revised down and Fed Powell will keep raising rates, and therefore, so what? Keep raising rates. There, the SPY will drop 10% below the October lows. If enough people believe it will drop, then it's market sentiment before the candles actually show it. No, Rob, candlestick signals are everybody's buying and selling decision. So all that information is out there. We don't have to assess whether it's correct or what to do with it. All we have to assess is what is everybody else's decision based upon all that information. So we're not trying to be an analyst. We're analyzing what everybody else's decisions are. MRTX, I think I already put a asterisk next to that one. Yes. Again, we looked at this one and said if it opens lower tomorrow, you got that slow curve working, and it's telling you at this level is not acting as support anymore. You probably will be looking at wave 3, and look where your stochastics are. Telling you that's a good setup. So it would be wise for me to place a stop below today's bear engulfing on EQH. QH. Uh-oh. Yes. So what would be your visual analysis factors on that chart? 1, the bullish engulfing signal. 2, the fact that he did it right here at the 50. 3, your stochastics rolling over, which tells you if they open this lower tomorrow, they're not going in this direction. Are they going down? Yeah, maybe back in here, but it would be, let's close out that position and find something better to trade. UMC, pretty simple. There's your, is that a kicker signal? Followed by a gap up. So what is that pretty much indicating? They're trying to get into this one with great enthusiasm. So what's our doji rule? Positive. They're going to move positive, which pretty much tells you this level is not going to act as resistance anymore. Richard, remember what Darren just said? That I was the worst investor in the world. I got out of the brokerage business because I realized the brokerage firms had no more idea about what made prices go up or down. So their philosophy was you just buy stocks and hold a long term and you're going to do well, which doesn't always work. But now I forgot what I was saying. Oh, through the years I've tried to second guess the charts. I've tried to analyze what the experts, so-called experts, would say on TV. Now I kind of scoff going the other way, saying the experts on TV have no more idea about what makes prices go up or down. It's not what you think, not you specifically or anybody specifically, but each one of us, it doesn't matter what we think is going to happen in the market. You want to see what everybody thinks is going to happen in the market. JBL, that's a good Morningstar signal. Gap up, breaking this downtrend. I would suspect you're looking at a J-hook pattern of wave one. Let's get rid of that. Wave one, wave two, that has strong prospects of moving higher. Up. Oh, was this a symbol you were asking for today? I saw somebody say up, and I didn't know whether that was an answer to a previous question. There's your fry pan bottom breakout. Just check your volume to make sure you got good volume. Ah, carry. XPO. Yes. Whoops, get rid of that. That one you can go long. Notice you're starting to get up in the overbought area, but I would suspect their first target is up here. So if I was buying this one on positive trading tomorrow, I'd just put a safety stop below the 50. After having been all over the country taking classes. All right, thank you, CJ. And what I've discovered is you don't have to make this complicated. If the signals work, which we pretty much should assume that they do, or we wouldn't be looking at them today, at least we know that a confirmation of a signal puts us with much greater probabilities that we're heading in the right direction. Darren, what I've discovered is the big money has no more idea of what is going to happen. Now, they may have a lot more facilities to do research, but the reason we have electronic trading online today was, I think it was in 1987 when we had the flash crash. If you were a trader or an investor, you couldn't get through to your stockbroker because everybody was panic selling and the brokers weren't picking up their phones because they were afraid. But it turns out that was most of the public wanted to buy because the prices had dropped so much, and they couldn't facilitate any buys when all the institutions were panic selling. I don't know whether they were panic selling, but they were all hitting stops and creating more downside. So SOS trading, or electronic trading, became instituted at that point so that everybody that wants to make a decision doesn't have to call their broker to do it. And remember all the adages they tell us that when the public starts buying, that's the time to sell? That's because all the expert stockbrokers, just as human as everybody else, would wait to see that everything's acting well, and or they would call up their clients and say everything's moving up, let's buy. So they were instructing people that weren't making the decisions to make their decisions to be buying, and that was usually at the top. Whoops. Oh, hold on. Everybody's scrolling past me. I remember a friend who was a broker in 1987 who went into hiding for a week. That's probably true. I was started at the ripe age of 21 years old to be a stockbroker, and one of my managers said, when everybody is, or the market is down, everything's selling off, the best time to get customers is call them. Call everybody, because you can bet dime to donuts that their brokers aren't calling them. I gained a lot of customers calling when everybody else was hiding. Respectfully, in 1922, almost without fail, the fundamentals had some bearing on market sentiment. You agree some. If we kind of know that if the inflation report or wages or jobs or other things of the market is looking at is high, then the market historically goes down. If the report is low, then the market goes up. In this situation, the market has had its most volatile trading days on the fundamentals based upon the 8:30 a.m. report releases and before the technical candlestick and patterns is set up. Rob, I would disagree. The fundamentals do not move markets. The perception of fundamentals move markets. So how many times have you seen a company come out with great earnings and it crashes? Or the other way, company comes out with lousy earnings and it skyrockets. Those are fundamentals that have nothing to do with what investor sentiment is. If everybody thinks those terrible earnings weren't as bad as what they were expecting, they're buying. If those great earnings weren't as good as everybody expected, they're taking profits. So I always come back to the basic statement that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And all we're doing is, when we see the graphics of candlestick signals and patterns, is we're just identifying what everybody's decisions were based upon that information. So yes, if we can see that there's high inflation, that the economy may not be as great as everybody thinks, we don't have to analyze whether the market's going up or down. All we have to do is analyze what everybody else thinks the market is doing. Whoops. So we knew we had high inflation down here, yet the market went up. So we're not trying to analyze what the market should do. We want to be more attuned to what is the market doing. So I've been talking with some money managers, and one of the aspects of candlesticks says, if you think a company is doing great and should be bought, and then it keeps doing this, it does two things. One, it's telling you what everybody else thinks, and two, maybe you want to go back and check your fundamental analysis to see whether you were correct or not. So I'll end this with, there is only one correct indicator of what the market's doing. and that is the market itself. All we want to do is analyze what is the market telling us. That is the decision-making process of everybody buying and selling in the market. So with that brilliant philosophy, we'll see everybody bright and early tomorrow morning in the chat rooms. How's that? All right, everybody, have a good evening. We'll see you tomorrow.